Artificial intelligence was just approved to be used in appraisals, and it's going to completely change the game. So, as buyers or even sellers, there are just a few but very critical things that you need to know about how the appraisal process is going to work moving forward. And that's what we're going to talk about here today. So, do you find it as crazy as I do that AI is going to be in the appraisal process now? I know some situations maybe it makes sense, but to start to incorporate it really kind of across the board, and this is just the beginning. So, I talked to a number of appraisers. My mom is an appraiser. I work with some really good local appraisers. One of the main local appraisers been in the area for a really long time. It's where I get a lot of my information and stay up on it. His name's John Hooks. So if you need an appraiser, definitely reach out to me and let me know. My name is Ben Larson. I'm with the Larson Realty Group. My team and I help buyers and sellers and investors all over the Los Angeles and Orange County areas. So if you have any questions about anything specific, feel free to reach out. And if you want to schedule a time to just talk strategy session or just get my thoughts on things, definitely go into the description and you can find my Calendly link. You can find it on my YouTube page. So go ahead, YouTube channel. So go ahead and check it out there and set up a time to talk more. So let's get into what this is really talking about. And I'm going to go through a presentation and I'm just going to tell, what are some of the different things that happen with appraisals, what different types of appraisals, what a buyer should be looking out for, and really a seller as well, how it's going to affect sellers in these situations. We talk a lot about buyers because this is justifying the value of the home that they're purchasing. So it is a big deal for that, but it also plays into sellers and making sure, the deal doesn't blow up or, things may happen with that. So this is some really, really important, relevant information, I think, right now. So stay with me and let me know if you have any questions. I'm going to go through it and then feel free to reach out if you need any other info. Okay, so let's dive in here. Okay, so here's the presentation. So I call it the blueprint versus the reality. So, you can see on the left here, here's all the graphics and things that can be seen and all the numbers easily seen by a computer. And then there's the house itself. Not all of that can really be picked up by artificial intelligence, at least not the way it's working at the moment. But a lot of it can. So let's get into it and see kind of what's happening here. All right, so saying artificial intelligence is rewriting the rules of conventional lending. It's for one, it hasn't hit yet. This is March 2026 when I'm recording this. It was supposed to come into play last year, middle of the year, then by the end of the year, now by March. Regardless, it's happening. It's getting some pushback, which is kind of delaying it a bit, but it's happening. It's coming. This is information that we all need to know. And this is information that appraisers are making sure that we know because of how important it is. All right, so they're saying it's rewriting the rules, and it really, it's not changing the rules completely. It is rewriting. It's kind of adding to it. It's changing some pieces. A lot of it still works kind of the same way. We got to be a little bit more on top of things, act quicker, and we just have to know what some of the different things mean that maybe haven't been as important in the past, because now they just may not be as effective as maybe they were. So saying the shift here, March 2026, it's when they're saying they're going to integrate artificial intelligence in the appraisal process. It was approved. It's just the fact of actually getting it integrated. And when I say fully integrated, it just means it's being part of the process. It actually will be part of the process, and it's approved to be part of the process. So it doesn't mean it's like completely taking over the process. The confidence, a lot of people, especially more AI people, especially, they think that AI is going to be able to dictate its own opinion of value on historical data, as well as other factors and things that it's receiving as input, and that the output is going to actually be able to value a home. So we'll see. We'll dig into that. I've got my thoughts. Don't fully think so at the moment, but let's see where they're going with it and what some of those points are. The blind spot. Now that's where I'm coming from, where I'm thinking about what's the blind spot of all this, especially in areas like Southern California, Los Angeles, the beaches, areas like that, cliffs, mountains, hills. You've got views. There's all these different things. That they're trying to. Seems like they're trying to get to the point where they don't want any human interaction. They want computers to be able to just generate this, and lenders think they're going to save money because they're not paying appraisers. They pay for an AI program, and a computer's going to be able to do it all. But again, at the moment, I don't think that's the case, and they think they can do it without seeing the home, seeing the neighborhood. And there's just, like it says here, nuances of the street, nuances of the area. So it's just certain things that it's hard for a computer to really do that. So let's talk about the 3 different types of appraisals. And these are the different types of appraisals that can be done right now, or being done. So the first is value acceptance, bifurcated, more of a hybrid type, and then the traditional appraisal. So the value acceptance, if you're in the industry or you've had this done before as a buyer or a seller, you may have heard of an appraisal waiver. It's really what that is. They're saying it's value acceptance, pretty much saying that the value is already accepted. As you can see there, formally it was called an appraisal waiver. Hasn't been called that for a few months now, but people will probably still refer to it as that for quite some time. So the main thing is the benefit. There's no new appraisal required. That's one of the benefits. There's an existing database of appraisals. Maybe this was just had a refinance done. Maybe it just sold. Someone has to sell again for some reason. They got moved or for a job, or something may have happened. So they basically can look in their system and say, okay, values are at least as good as they were before, or maybe they've gone up a little bit. They can adjust for that, but they know basically everything else is pretty much as it is. And so there's no new appraisal required. And what that means with LTV up to 90% is pretty much it's the loan that you're getting. Let's say you're purchasing, or maybe this is even a refi and you're getting an appraisal waiver. The loan can't be any higher than 90%. And in most cases it won't, but there are some loans that are 95%, which is only 5% down, or even FHA is only 3.5% down. So obviously that would put you over a 90% loan to value. So it's the percentage of the loan to the value of the home. Just can't be, it's got to have at least 10% equity. And this is completely data driven. Just like I said, an appraiser or an inspector, no one visits the home. They just look at what it was on a previous appraisal. Typically there's a database of all the appraisals that were done. And that's how they say, okay, we're comfortable with the value, with whatever the purchase price is, or whatever the refinance amount is that the person's looking for. All right, so the second one, this is one that maybe a lot of people are probably not familiar with. And this is really, it's pretty new to this AI, being incorporated into appraisals part. And this is one you really need to be on the lookout for. And as a buyer, you're going to want to ask your loan rep, what appraisals being done? What are my options? And you may have all 3. Not every home qualifies for a waiver, but you may have all 3. Maybe it does. You really want to go with that? It's completely up to you. As a buyer, I would usually say no unless you feel really good about the value. Sometimes it's pretty clear that the home is worth what you're paying. But if you're in a transaction and the appraisal comes in low, as a buyer, that does give you an opportunity, depending on if you have an appraisal contingency or not, that does give you the opportunity to negotiate. So if you just take the appraisal waiver and you go that route and it comes in, you're good to go, then maybe that's not the way you want to go, because maybe a regular appraisal would have come in a little bit low, and you might be able to negotiate, the difference or some of the difference and save yourself a little bit of money. Now, as a seller and a listing agent, you want to ask what kind of appraisal is being done, because, on one hand, as a seller, you just want to make sure it appraises and the buyer moves forward, because you're selling. If the value is not really there, that's the buyer's fault for taking that on, right? But if there's an appraisal waiver and say it comes in low, well, you probably wanted an appraiser to actually go out there and see, maybe there's some really unique things about the home, or some things that you've done in the last few weeks getting it ready to sell that have actually added value. Or maybe there are some comps that have sold recently. When values are going up, you might have some better comps that have sold, and the value might actually be higher. So, or maybe there were the flip side of that. Maybe there was a really low comp, and it might look at that and adjust for it and bring it down. There's uncertainty, there's certainty and uncertainty. It's kind of interesting with that. So just something to know about the value acceptance, the appraisal waiver. The bifurcated, so that one, like I said, that's kind of what's with all of this new process that's going into play. The issue is that with that is, you can see the bullet points here. For one, the licensed appraiser does not see the home or the area. It's called bifurcated because the work is split between two people. There's a third-party inspector that comes out, visits the property, and basically collects the data. They're not an appraiser, they're not a realtor, they're not a broker, they're just a person. And the way it was explained to me is they have no influence on the value. They're not involved in the valuation one bit. They might as well just have headphones on because there's no use even talking to them. They're just out there to take the measurements. Have probably, like an iPad or an iPhone, and they take some photos, maybe video. They just collect everything. And as you can see, a licensed appraiser is involved. They complete the valuation, but remotely. So they never even walk through the door. So they're somewhere. They could be in another county, another complete part of the state. Who knows? Maybe they'd be out of state if they're licensed to do appraisals in this state. But it'll be sent to them, and I wouldn't be surprised if that would be the way it goes. And is that person really going to, the inspector, are they going to pick up on the nuances of the area? Probably not. That's not their job. That's not what they're being paid to do. So I doubt it. So you're just hoping that the appraiser knows enough about the area to pick up on some of the nuances, or already knows the nuances. Maybe they're experienced and they've done appraisals themselves in the area before. But that is what's tricky about that one with the bifurcated appraisal. And so again, buyer and seller, the same two issues. As a buyer, they could miss some things, and maybe they overappraise it when really it should have come in a little bit low. And as a seller, you could have the same thing. Maybe they missed some things that really added to the value of the neighborhood. That they don't know this block compared to the next one over. Some appraiser remotely doesn't realize that, and so that's a big deal. So that's part of the issue of that. And then, of course, the third option is a traditional appraisal, and it says here that's the highest standard. A licensed appraiser personally inspects the property, the area, the comps. So they're going through all of that, and it's someone that they actually go out to the property, or someone that as lenders, realtors, brokers, we can't influence the situation, but we can provide information. They're not going to listen to what things we say. They're not going to be influenced by us, but we can provide information. We can ask them questions. We can give them information that maybe they weren't aware of, that is legitimate information that they can apply to what they're doing. We can't do that with the inspector that comes out with the bifurcated appraisal. So that's the highest standard. And as a buyer or seller, just to be sure that you're getting the true value, that is the way I would think you'd want to go. Okay, so inverse relationship between speed and buyer protection. The quickest one possible, it probably has the least amount of buyer protection. And then it goes up the scale. So the value acceptance, the bifurcated, the traditional, cost to execute. The cost obviously is the highest for the traditional because you're paying an expert, an appraiser, to go out, and it's hundreds of dollars depending on the situation. Typically $700 or $800, I would guess. It could be anywhere up to $1,000 or more, depending on what it is. If it's an income property, big property, so that'll vary. But it's it's not $50, not $100. Value acceptance there's no cost. It's just basically click of a button and it tells you if it's approved or not. And then the bifurcated will be a lower cost because You're just paying someone to, hourly rate to go out and do the inspector part, and then you've got an appraiser that's just doing volume work, so they're not going to charge their full amount because they're not even going out to the property, saving them a lot of time. If it could be a good way of doing it if they could do it effectively, because they could just do a lot more. And there aren't a lot of people appraisers. There aren't a lot of people becoming appraisers. So I think we do need the good appraisers to be able to take on more. So that is one thing that might be a nice benefit of this, if they can get it kind of figured out, but I don't know. Speed, obviously the other way around. Human inspector on site. So it shows you the inspector, at least. So a human goes there. That's the bifurcated and the traditional. Licensed appraiser is only the traditional. Risk level to the buyer. Obviously the highest risk is the lowest cost and the fastest. So sometimes buyers can be in a rush and they say, we want to get, and buyer's agent, everybody, we might have short timelines. If it's competitive, we need to get things done as quick as possible. It may seem appealing, save the buyer some money, get the appraisal done, instantly, basically. But is that really the best to the buyer? And it doesn't mean that it's not. There could be plenty of times where the appraisal waiver is worth it, but the buyer needs to know that. And the buyer just needs to know what the options are and weigh those when making the decision. And a lot of times they don't know what the options are. They don't know that they have options. They just kind of go with it. So that's what I'm trying to educate you a little bit there today on that. All right. So the hidden costs of the seller's win. So the seller wins, right? The seller and the lender. This is what we're talking about. If it's faster, if it's an appraisal waiver, it's a faster closing timeline. There's zero risk of low appraised value if it comes in at the value of the purchase price. So of course the seller is a win, and the listing agent and the lender. It all comes in where everybody wants it, and the maximum efficiency just keeps things moving along. So for the buyer, like I said, the trap is, hey, it's going to save me $500 to $700, maybe more in some cases, right? In a few days. But it trades here. It says it trades away the independent verification, and it does. You don't have the appraiser actually going there and seeing it. They can't. They're blind to the condition issues, neighborhood nuances. And lack of basically a safety net if the local market softens. So if the market softened and that's not taken into account in the appraisal value acceptance appraisal waiver, then that's not taken into account. And so the buyer doesn't have that protection. So a full appraisal that's your independent verification of value. So there's the nuisance factor. So what if there is a busy street right behind the home, or a school that's really noisy, and you don't know that? An appraiser actually goes to the property, and they're going to hear all that. They're going to notice that. The hidden premiums, the flip side of it, it can't quantify the exact premium of things like a guest quarters or a massive panoramic ocean view, or huge city view or something like that. So it just those types of things. That's where when it's certain situations, there's subdivisions, and we have some in California. We don't have as many here in the beach areas or Los Angeles or the South Bay, but you get areas where there are just tracts of homes, one after the other, and if they're on just a typical street, an interior street, it's the same. There's a few different models. Not going to be a big variation in what those are worth. That I could see that making a little bit more sense. But here, you've got neighborhoods that have similar models, but things have been, updated. Things have been added on. There's all kinds of those different things that have been done over the years. There's so much variety in the types of homes that it's not cookie cutter. It's not just one is the same as the other. So the verdict on this, basically the value acceptance, fits the lender's efficiency goals. But a traditional appraisal is the one the buyer is actually going to. It's going to fit more of their reality and their protection. So I wanted to touch on just a few points here. And now, if you're a buyer or a seller, this may not involve you a lot. It may not be super relevant. It's not something that you're going to be part of or you're going to need to do, but it's educational for you to know how the process works and what your agent is probably doing or should be doing behind the scenes, and just so you kind of know what's happening. Let me give you a little bit sneak peek behind the curtain on what we do. So when there's an appraisal that's going to be done, what we do as agents is prepare a package for the appraiser just to give them information, make sure they have everything they need. Sometimes, they may know the area, they may know it really well. They may have all the comps and everything, but sometimes they don't. And they do appreciate the information. Most appraisers, from what I hear, do. And as long as you're nice and professional about it and present it in a good way, it's information that they'll take a look at, and if it helps, they'll use it. So what I just want to kind of give you a sense of what the big part of it is comps. So it's the comp package that we give to them. And so I was just going to give you a little background here. And now this says, the most successful agents, they don't wait for the appraiser to come back. They take some time up front and they prepare this package and they give the information to the appraiser just in case. It may not do anything, but it's well worth the time that we put in to do it. So this just gives you a little bit of the formula of what we're looking for when we're putting together comps. We're going to look at 5 to 6 closed sales in the last 180 days. Obviously, if they're in the last 90 days, that's even more relevant because 6 months ago, 180 days, the market was right now, it was completely different than it is right now. So it can be very different. And of course, you can adjust, and an appraiser is going to adjust for the different market. But the more relevant you can get, the better. One pending sale, and ideally you can throw an active or two in there. If you don't have any pendings, nothing that's in escrow, then you can throw a few actives, 3 in there. And then 20%, just kind of staying within 20% on the square footage is kind of the main reason for the 20%. So it kind of gives you a sense of what we're doing with the comp package and the thing we're putting together for the appraiser. So there's what the appraiser calls the golden rule for comparable sales, and this is bracketing. So just to give you a sense of what it is, bracketing just means that the subject properties should fall in the middle. There should be ones that are smaller, and there are some that should be bigger. So that way it falls in the middle. You don't want your subject property to be the lowest one or the highest one, as then it just kind of throws them off. If it's the highest comp, they're going to have a hard time justifying that, okay, other things are selling for that in the area. So you can kind of get a sense of that from this slide here. Just shows, on the smaller one, cheaper one on the left. So you've got the bigger one, more expensive one on the right, and then the one that way you can bracket yours, and they can see there's one higher and one lower price-wise. And it says, note directly from the appraiser, lenders never lend strictly on dollar per square foot. So there's the precision matching beyond the basic numbers. So the more center we can be on this, the better. And we're looking in the center, right in the bullseye. That's where you're finding the hyperlocal good comps. They're same condition, similar market area. They're within a mile, maybe even less, within a half mile. Then as you're going out, you're going to see the middle ring. And, those closed within 180 days, maybe not within 90 days, but maybe 180. And then we're going to go on out to the outer ring where there could be some exceptions, amenities, one-offs, things that not every property has. Maybe it's in an area where there's a pool and there's not always pools, or, a detached unit, detached guest house, could be permitted, a permitted guest quarters, things like that. Or even a specific nuisance, some negative thing. It could be something that is specific to that property that may not be affected by the other homes in the area. So the critical window. So this is important. This is one of the big things that changed. And again, as a buyer or seller, it's not a huge deal to you, but it's something that is good for you to know. So, not all agents know this right now. And you may want to mention it to the agent. Say, hey, I know the appraisal is going to happen. I know you usually provide them some information. From what I hear, and this is not what I hear, I heard this straight from an appraiser, and he's saying this is absolute, that in the past, we would prepare a comp package and we might leave it at the home, or usually we would take it and meet the appraiser so we could explain it a little bit, provide him all the stuff I kind of just showed you. But the now we need to have all that ready to go before the appraisal is even scheduled so that we can send it immediately. Just have that package ready. If you're a real estate agent and you're watching this, you didn't know that, have the package ready before the appraisal is even scheduled. So as soon as you hear from that appraiser or the appraisal management company or whoever's scheduling it, an assistant for the appraiser, you say, hey, what's the appraiser's email? I've got some info I want to send over. Boom, shoot it over. Still go meet them. But in most cases right now, from what I'm being told, by the time you meet them at the home, it's too late. They may already have the report almost fully done. They just need to go out and see the home, finalize it. Or if it's a bifurcated appraisal, doesn't matter. Like I said, that guy could have headphones on. Doesn't matter what you say to him. It's not sinking in. He's not going to take it back and tell anyone. So if it's a bifurcated appraisal, then it's definitely missed your chance by that point. So that just kind of sums that up a little bit. So again, demand the complete picture, question the algorithm, value acceptance that favors the lender, favors the seller if it comes in at value. Empower the agent. It's tell your agent about bracketing. A lot of good agents are already going to understand that, but just mention, have to tell them how to do their job, but you can tell them, this is what I heard. Is that, familiar with that? And I say, yeah, I got it all under control. And then the timing's huge. Like I said, got to do it right away now. We didn't really have to in the past, but now we need to. So, and data, good line here. Data is just an outline, but make sure you have the full picture. Data is this outline of the home. Obviously, the home looks a lot different in that full picture. So that's what you have there, the full picture. And that's what you need as a buyer going into a transaction, especially a massive financial transaction like this. So that sums it up really quick. Just to remind you a little bit, you get the 3 different types of appraisals. You can ask your lender when they say you're ready to order the appraisal. You can ask them what your options are, and then so ahead of time, because not enough buyers know that. So that's I've got other videos here on my channel. Go ahead and take a look at other educational videos. I got a lot of videos about different areas, so definitely go check those out. There's another one on your screen right now, and I hope to catch you next time. Thanks for joining.